CEO of Telefónica missed the deal of WhatsApp in their Series B. We were being built just because of FOMO. We don't think there's enough exposure from CVC towards startups. Like, what the hell of a CVC are you? What the hell of a CVC are you?
So welcome to Founders and Funders, our channel focused to interview with the innovative investor and also the visionary founders, so we can guide through you guys on the tech trends and investors landscape. We're very happy today to have Kyle from Wayra. Welcome, Kyle.
Really happy to be here. Nice to meet you again, Stanley. Always happy to meet you.
Good to meet you last time, and then very happy to have you to join us today. I'm very excited. So welcome, and let us just go quick dive in. Tell us a bit about Wayra. You know, what's your sector focus and how do you differentiate from the market?
Yeah, definitely. So when we talk about Wayra, the first thing you have to know is Wayra is actually a CVC, and especially with the VC arm of Telefónica, which is a telco company that ranging abroad from Europe and Latam. And what we focus on, especially from the UK's perspective, on the European market, or even on the geographically agnostic perspective, we're looking at several main different things. The first thing is definitely the core business, which is we call it as a connectivity and network. And the second thing is probably the peripheral areas of areas like AI, ML, which is a really big focus of ours, and also on the cloud side as well, to build an ecosystem. And then last but not least, is definitely on the sustainability side, since telco is a big energy consumption hub, and we're trying really hard to make the energy more efficient and monitoring on a more precise approach. And how do we do it, like differentiate from other, let's say, venture ecosystem, is also because you have the C before the VCs, right? So you definitely have to drive the corporate assets out. So by that means is that we are investing on behalf on a strategic level, but also need the rationale of being financially stable and financially oriented. So in conclusion, I'll say how we differently operate with others. We're a hybrid focused venture arm, but with a strategic fit. So that's the way I would describe it.
Brilliant. Sounds like you've got a lot to get on the plane. In terms of criteria, how do you evaluate companies? What factors you look at? And then after investment, how would you provide support to the portfolio? Because you guys got a whole arms of operations across the world, I suppose.
Yeah. So to answer this question, I'll probably just separate it in between, let's say, before we invest, which is how we evaluate, and after we invest. Before we invest, there are several sectors or several key criteria we look at. So it's not too different compared to a VC, which is looking at the team, looking to the product, and I can go on this on a really deep dive perspective. So probably just cherry picking on some of the different things that we will see. So basically, as a strategic ones, we always will see how strategic align with our parent company and how this could be impact on different kind of business units. So there are some areas that as a B2B or B2B2C focused investors, especially corporate investors, we're always chasing for enterprises that either helping our enterprise to A, increase the revenue, B, reduce the cost, 3, increase the customer satisfaction. So these are the three maybe North Star when we're looking into startups that can really bring in the so-called impact. And to evaluate that, I think it will be more about, we would like to see like startup founders that knowing the corporate and enterprise language. We're really keen to talk to those people who already have the use case, which is easier for us to really navigate internally to the right PUs. So that I think would be a little bit different from a lot of different firms and VCs in the ecosystem. And in terms of the support side, as you mentioned, that we do have a really amazing post-investment team. Either that could be like head of finance and portfolios, helping to monitor and tracking all the activities after investment. They might be helping on fundraising in the future. We also have an amazing head of business development, which is probably in charge of most of the conversation internally with the Telefónica business unit. So you can see we actually have different names across different countries. So you have Movistar in Spain, you have Virgin Media O2 in the UK, have O2 in Germany, and you would also have Vivo in Brazil. So you got different names and different brands. But our head of business development is basically talking to each other, understanding what are the helps that we can bring in to different markets by the help of different business development leaders across different offices.
Sounds good. Sounds like if I'm a founder, I would very much want to get a tie with you guys, given the huge resources and leverage. How many portfolio companies do you have?
Wayra itself have started our journey around 12, 13 years ago as an accelerator incubator. So we were started as more on a startup ecosystem play. We do invest in quite a lot of startups. So globally, we have over 1,000 throughout the years. But on the UK's perspective, we have around 200-ish portfolio. But after 4 or 5 years ago, we have transitioned into more like a pure CVC play, which currently I think we have around 40 and 50 investment since then.
I got it. It's still a huge number, isn't it?
Yeah, I think the portfolio side of the work is never an easy job. So the only thing you need to do is really seeing the right startup and making sure that even the startup itself, the portfolio itself, can have a multiple effect on helping each other.
Exactly. What kind of sector do you find most successful cases? And then how are they, having the common character? What kind of characteristics do they have? And how do you internally measure the so-called success as a CVC?
Yeah. So I think these are all the great questions. So in terms of a specific sector that I feel really successful, I would say there's none single sector that being successful only solely. I think that would be bringing back to the second question about what are the attributes or characteristics I see from a successful startups. The first thing I would say is definitely they do have enough capacity to work with a CVC as Telefónica, because if you can imagine, as a startup, you probably would have a really full-on capacity on doing R&D, doing on the PE side, and suddenly you have such a big company, Telefónica, want to work with you, that you might have to spend 2-3 people FTEs and working together with 10 to 15 people, so full-time, either engineers, product manager to work together on a single project. So it's a big cost on time and effort. So what we want to see is that the startup, when they approach us or when we approach them, they have a clear mind about how to design the capacity on working with such a big corporate like us. And because I'm coming from a product manager background, so I definitely would understand that these kind of things is really important, because it's basically just how we define your lifeline internally with us and externally with other existing clients or new clients you want to sign with, to making sure that your growth pipeline is actually quite healthy. And the second thing I might talk about in terms of a successful attribute is, I'll say, is the mindset of trial and error, because a CVC road is definitely not like a way to the success. It's more about open one door, but close one door at the same time. So I'll give you an example. There's a portfolio that I think some of the most successful portfolio we have, they're not, when we invest it becomes super successful. It's more about we spend years with them, opening doors for them, trying to making sure if this is relevant one to drive the maximum commercial value. If no, then we constantly doing that. And throughout the days, we realize that the assumption that we usually have of being successful, being a certain region or business unit, is actually not entirely correct. It's more about having a little success in other market or other region, then it starts to growing and have more attention and then bring it back to us. The way how we define success could be very different, depending on what type of CVC we have. So there are maybe financial focused CVCs, and there are strategic fully focused CVCs, and there are also something we call as a hybrid ones. So I think the way we define ourselves is fully reflect on what are our KPIs. So for Telefonica's case, we do a big KPI, which is on the revenue that co-generated between startup and Telefónica. But by the mean of revenue, it doesn't mean that we take you as a client of ours, you have to buy our solution. It's more about how could you leverage maybe the distribution channel of ours, or how can you generate the contract, the contract value internally signing with our company, or maybe, as I mentioned, about the 3 top things, either reduce costs or either increase the satisfaction, is also a KPI that we will translate that into in terms of the revenue side. Yeah. So that would be more on the strategic side, and definitely financial side, that we do have a threshold in terms of the IR that we're looking at. So we also, when we validate you during our due diligence process, we also want to making sure that financially, with our help, you can grow to the expected value that we would like to see in the future.
Sounds good. A very interesting guideline, because I've been speaking to some CVCs in Asia, and it does seem like they need all these sort of framework to get their setup going.
Add on a little bit thing in terms of a different structure. One thing to be really taken care of is that the KPI would change on a constant basis. I wouldn't say it would change on a yearly basis, but whenever there are a senior change, or there's like the parent company, the C levels also change, we will sometimes see not only us but also others on changing the thesis, changing the way of how they want to structure. So this is something that is on changing on a constant basis. Yeah.
How long has this CVC arm has been set up? Because it does seem like you said, right, when senior management changes, the whole thing sort of just flow through like an automatic machine. So it seems a very mature model.
Yeah. So in terms of the CVC arm, as I mentioned, probably is we have been here for 12, 13 years, but the CVC itself is probably 4 or 5 years. But we managed to create that kind of like startup ecosystem connection by having the incubator and accelerator. And talking about the C levels change, that we're quite lucky because sharing a little story about how we are being established is also because back in the days, basically the CEO of Telefónica missed the deal of WhatsApp in their Series B. And we were being built just because of the reason of the FOMO. So you will know that we have the back, we are built because the CEO wanted us to have the innovation driving in, although during that time it's more about PR play. But after a few while that we have seen is that we're quite lucky. We're the focus of ours is usually quite stable. We only change in terms of how we see the entire market. Either it could be tech market, either it could be more specific to the telco market. So we change alongside with the market rather than because the senior team, C-levels team change. But the other hand, you will see CVC usually change they usually maybe report the CFO. Now they start to report the CSO, which is Chief Strategy Officer. So the mandate would also change a little bit. And sometimes even when the company usually in putting a lot of effort in a specific area and probably deploy more budget and try to do that in 5 to 10 years, you would get a heads up on parallelly looking together with the R&D team internally and externally finding the advanced technology that might can match with that.
Sounds like the FOMO actually plays out, which is good. But before we move on to the next section, one critical question, I suppose, like you mentioned, right? You expect the startup also contribute that time and effort because, you know, we are working on a very immersive level. So what kind of stage do you typically invest? You know, what ticket size roughly, and how long is typically the time frame and your evaluation process?
A really great question that people have to be aware of because they sometimes approach us by not fully understand on how and how long they should expect the entire deal cycle to be done. So our investment stage is ranging between C to Series B, but the sweet spot is still Series A or even C+, because that's where we see the value as a CVC that coming in more on helping on the market expansion and internationalization. In terms of ticket size, we're ranging from 100K to 6 million, which is a big range, but this would depend on the engagement level with our internal team. The stage that we invested in is from C to Series B+, and the sweet spot is still on a C+ or Series A, because that's where we see the value from helping on market expansion and even internationalization of a global footprint of Telefónica. And the ticket size we do is have a big range, which is from 100K to 6 mil. Really depends on the engagement level with Telefónica. So by that means we have 2 different teams on investing on a 2 different approach. So for myself, I'm in the early stage team, which is invested in 100K to 500K as a first check writer in Telefónica. So what we do is that we don't require as a really big contract sign or has a finished POC. We can easily start as finding some internal BUs to validate this and have their verbal approved. And then we basically see the future value this can drive internally so that we can invest. And the deal cycle would be ranging from either 2 months to like 9 months sometimes, when the internal conversation might be changing and the BUs might be taking over. So that would be the average timeline, I would say, between 3 to 4 months that the deal will be done. So a little bit longer than traditional VC. But we also want to make sure that we can do the commitment that we made to the founders as well. And for the larger stage, which is 1 mil to 6 mil investment, this will require more like internal engagement. Either it have to be signed contract or there is a POC plan. So in this scenario, I think the deal could also be a little bit longer. I think it's a little bit longer than 6 to 9 months or even a year sometimes. Depends on how established the internal contract has already been done. So there are different approach, different size, and different stage. So it's actually, from an outsider perspective, it might be a little bit complicated sometimes.
Perfect. But I think it clarifies a lot of the big question marks in the market, or even from the startups perspective. Like we met last time, I was thinking the like of you guys would only invest in later stage, but it doesn't seem like it not even need a POC, which is very, very interesting. Your career background, so tell us about how you get to this role now, and then are there any particular working professional experience in the past that you think that drive you in here, and then how do you think moving forward are some of your very good transferable skills from before?
No matter your founder or your investors in the ecosystem, that you have to know the amazing things about this industry is that there's no such a correct and the right formula to become a founder or either investors. So my background is actually more on I'll say on an operator, founder / investor role. So I started myself as a product manager in a tech company, helping more on industry transformation, helping a semiconductor to coming up a new business unit on healthcare. And then afterwards, I feel that I know the journey from 1 to 100. So I want to try out myself from 0 to 1. So I basically become a founder that established more like on a CPG industry. But after that, I use the data to collect it and become a tech founder to write an algorithm, basically that helps the same target audience for the CPG market. And after that, exit the business and I moved to London. So that's when I started to seeing that me VC probably just on the other side of the table of a founder. So I want to know more about it. So throughout the time, I've also joining international VC program, Global VC, and get a sense understanding what exactly is VC looks like from a European perspective or a global perspective. And throughout the time, I just feel that maybe CVC is some really amazing market I want to get in. But also on the same time, also wondering like, how can I be in investing, but also keep my operator and founder background and bring that value to the founders. So that's why I have seen the word CVC at the moment, which is you still have to invest, but you also on the backside of your head, you have to really think thoroughly about how you can help this product or this team being working together with a big company. So this is something that's quite amazed. Yeah. And to answer your question about transferable skills, I think it would be really important about how you are number sensitive. So you have to really sensitive in terms of numbers. So the numbers I'm talking about is not only financial numbers. Become a founder or investor, like numbers is something you have to get along with on a day-to-day basis. But the numbers you have to take care of is not only on the revenue side or even on the gross profit or gross margin side. It's more about you have to be sensitive about the growth, the change of the numbers and understanding why the number changed and is it change within your expectation? If yes, how can we make it better? Or if no, how can we improve it? So this is on a day-to-day iteration towards numbers. And the second thing is definitely on understanding like the interpersonal skills. You have to really understand what are people's need from a founder's perspective or from an investor perspective, because both you have to know. Either founder, are you sure through talking to people you're solving a problem that people do need? Or investor, do you see this business actually solving a real problem that people need? So I always say that founder and investors in the same team, they also think the same thing. So these are the things that you always have to constantly thinking about and talking to the right people to making sure the information is correct and updated. Yeah.
It's very helpful. I think even for people who want to get into this industry, you've got like cross geographic experience, cross sector, cross role, product manager, now investor, and then now inside like a big corp. So I think that's sort of like a mix of like internal product manager, isn't it? But now doing the other side of the formula, which is quite interesting. And then you mentioned about the way that you have this skill set not only on the numbers but also personal skills, which is go back at the end of the day. I think it's the principle of doing any business, isn't it? Exactly. Very good, very good. Yeah. What excites you the most about the job? Because you've got so many jobs you can pick with your very good transferable skill set. And then how do you see, this CVC within Telefónica and within the bigger telecommunication industry moving forward? And how do you expect, this role would bring you or bring the company values in the longer term?
What excites me the most in terms of being in this industry, I think it's definitely the impact that you can bring to the table. It's easy, it's because during the time when I joined this industry, I've always thinking about why don't I just become founders again to chasing for the next exit or become a dream come true unicorn founder. But the important thing that I have thinking by myself is I always want to bring impact to the ecosystem. And I don't mind as coming from a founder perspective or either from an investor perspective. And being an investor, there are several things you have to be aware of is that you have to really tap into different technology and markets and really quickly like consolidate your knowledge in a specific field. And I think that's really important. And not only you have to consolidate knowledge, you have to being transferable to bring those knowledge into actual help on helping the business that you see would be successful, really success on this. So I'm really amazed by this in terms of like quickly learning, quickly helping, but on the same time, you really see yourself as being part of the team of the startup. So you see yourself also working in a startup at the same time and really fighting a real problem that they have seen day to day. On the same time, that the thing you have learned is really amazing. It can be really deep enough on understanding how a true technology works from end to end. It could be wide enough to understanding how this solution can be done in various different 30 markets across like LATAM or even like other European countries. So this is something that's super amazed by I feel super amazed. And on the CVC perspective, in terms of Telefónica position, I really do see how collaborative telco CVC in terms of this can work together. So a lot of people have been saying that, oh, CVC, on the end of the day, you're still backed by a lot of corporate, and corporate by nature, you have a conflict of interest if you're in the same industry. But I think there are more demand for being collaborative in the CVC perspective than having a conflict, because telco itself is basically having its geographically and have its like base market that is difficult to be like conflicting with each other. So for example, from a European perspective, we worked closely with Orange Ventures in France, KPN in Netherlands, and you can tell by everyone will have their own base, own market, and their own country. So what we do is basically sometimes we look into the same solution saying that, hey, we're looking at a similar stage. How do you think this could work with your local market? And what are the teams I usually talk to? So we actually learn from each other, or even we sometimes look into their portfolio, they look in our portfolios just to see like how this could be collaboratively work. Because at the end of the day, what we're trying to do is really making sure the ecosystem grows better and better, and we can all create some impact, as I mentioned, as an investor to our parent company. So impact is something that probably is the North Star why we're being so collaborative together. To answer the last question, which is the long-term expectation or the long-term aspiration for the future of Wayra, I see Wayra is actually in a really interesting and really good position at the moment, because if we see telco is not only by 5G, 6G, Wi-Fi, but even cable that you have seen from day to day. So telco is a big industry, and you can't really define it as one or two verticals or industry only. So we see telco, we basically separate them into a fixed network and a mobile network. So fixed network is ranging from like a cable network, ranging from a telco tower or really an infrastructure or data center, or even we talk about AI data center recently. So these are the fields that you would tap into, and these infrastructure can be worked across different industries that you have seen. Even on mobile side, mobile is not only on your phone. Inside the phone, you will see a lot of different either we see from the eSIM perspective, either we see on devices recycling even, and sometimes we even have software that on top of the mobile devices. On a monthly basis, when you pay the bill, how can we leverage that monetization, incentivize that we already acquire from the customer to adding more values to the customer end users at the end of the day? And what are the things that we can be built that helping our end users to get access to a different variety of features that we can build alongside with that? So we have looked into even in insurance tech, in fintech, and a lot of different fields that we try to see what are the values that we can bring. So the future of Wayra, coming back to the topic, I think would be a lot of exciting things happen. One of the key things as we are doing right now is really see the AI boom is really changing our ecosystem right now. We have seen that in the startup ecosystem in the past few years, and we think it's about the right time to push it along the way from the startup ecosystem to the public phase, to really let the public feels the difference of adopting AI. So that is one of the big fields that we are quite excited about. And also parallelly, what comes together with AI is energy efficiency and energy consumption. So that would be also the thing that we want to solve alongside with that.
I saw three big words here: collaborations, impact, and I think audience will also echo is your passion. Which is very important as making impact, working with people together, but without your own insight and the corporate vision. nothing can be achieved. But as a professional in this role, though, what are some of the challenges you see? Lesson that you learn? How do you stay up to tech trend? Because tech trend changes every single second these days.
Yeah, in our challenges sometimes will be more coming from internally rather than externally. So internally, as I probably mentioned, that CVCs could be really difficult to maintain our investment mandate compared to most of the important firms. That if you're looking at A16Z, if you look at Sequoia, look at Bessemer, these great firms, that their focus or their mandate wouldn't change in the last 10 and 10 years, 20 years. But for a CVC, because the most important thing is helping to drive value for your corporate. But corporate is on a constantly changing perspective. So if you're looking at Telefónica in the last 20 years, the thing they focus on about right now would not be applicable to the things that we start looking at, right? Because if you see from 2G, 3G up to 6G, or maybe like after 6G, there's like 8G or something coming up. There's a lot of new technology that we have seen. And every time when there's a new technology coming out, we always have to change our mandate. But what can I do when the mandate is changed? But I can also let the related founders be aware of that, hey, we start looking at this field because of this reasons. On the same time, how should I really keep the other VCs that we work closely alongside to understanding, hey, we have changed our mandate again. But I think these kind of challenges can be mitigated by really understanding the why behind the change, because only if you know why you want to change this, so this could be relevant or logical to others, that being aware that, okay, so Telefónica can now start looking at this because of this reasons, and that I can find a connection point. So that would be the challenge number one. Challenge number two would be more on being in front of the right startups. So as a telco brand specifically, or as a corporate investor, sometimes when you stand in front of a founder, you will get them confused because they're asking you, so what exactly does Telefónica look at? Or what exactly do you want from me? Or what exactly do you want as a strategic value that you see from me? And it's really difficult to have like a correct answer to every founders. But the only thing you can do is basically set up a really minimum requirement, telling them, hey, if you have meet all the checkbox like this, talk to us. And what we will do internally is helping you to navigation. So navigation is also key things. How should we navigate in between BUs across even not only in UK, but also entire Europe, and maybe even further to like Hispam or even Brazil market? How can we see that? How can we matchmaking for you for doing that? And that's sometimes quite challenging, because if you see entire Telefonica, it's big enough where you couldn't know every business unit, but it's also like quite relevant that you can duplicate the model in between different regions to find out the right team. So this is something more like an art rather than in science, to be honest. Just trying to figure out what are the future, or what are the different BUs that we can help on connecting them. So in terms of how I keep updated about the current technology, the easiest way, just you have to keep updated about the market knowledge. You know, I definitely understand a lot of founders or even investors have followed enough newsletters to that they need to read per day. But I think the most important thing is talking to people. As I mentioned about the interpersonal skills. As a founder, you have to talk to people, you have to talk to potential clients, you have to talk to indirect competitors, even direct competitors, to understand what is the future. Because at the end of the day, that's how you keep your product updated and really matching what people's need. Similar to investor, talk to people, talk to potential founders, talk to potential VCs that you work with, talk to some of the VCs that in a more growth stage, asking them what they have seen the company they start to buy from the early stage of VCs, or even talk to the pre-seed and seed stage about what are the new trends that they have seen that they find this the type of startup being successful. So you have to really talk to people, understanding and really making sure that the investment mandate or investment angle and the way that you evaluate a startup have to go hands with hand in terms of these upper and downward stream in terms of like an ecosystem. So I see CVC or even VC is also similar to a founder. You're also running a company that making sure the solution you serve, either to investors or founders, is really relevant, and that you can bring the best talent into yourself.
I mean, you're running, a few years, new baby within a big elephant. But then what you should not do, or what you guys should be refocused, just like a founder or in your previous role like a product manager. You know what we should not do, so to stay focused in your investment horizon is exactly the same as a founder, isn't it?
Exactly.
That's a very good sharing. So moving on, I suppose, we talked about, the company, we talked about yourself. Let's talk about deeper, as in how you see, CVC and Telefónica within the wider stream of telecommunication or AI sector in general. So what do you think about is the big advantage as a CVC versus a traditional VC?
Yeah, so as a CVC, we see ourselves differently is that we do have our parent company to back us. So we really can't really fighting on negotiating on the term sheet, financials, making sure that we have a bigger ownership or have a more favorable dilution compared to other firms. But what we can offer is one thing we always talk to the founders about is don't see us only on deploying capital, see our potential strategic value that we can drive alongside with you. And I see that this is not towards entire ecosystem, just some personal findings I find in towards Wayra. I think we're uncommonly patient towards the startups that we grow together. And also, if you have seen a good way of studying our portfolio is that we didn't have the mandate of like merge or acquire any business. The only thing we want to do is we grow hand with them, making sure that they can have early success or scaling their success to more markets, so that we stand a really good position on we're helping your business on really scale it up by the help of either Telefónica's distribution channels or Telefónica enterprise clients, or we have a lot of like capacity across different BUs that can really help on helping you on having the POC. So a lot of startups come to us. I'll usually also ask back the questions like why us, and several questions they answer me just like because I want Telefónica's logo be on my startup page. I want to making sure that this is a good validation point for other enterprises that want to work with us. And these are the things that beyond capital and I really cherish about.
And the second question is how do you see Wayra integrate innovations from startups into its larger business operations?
Yeah. So as you may know, like this is never an easy job, and sometimes it requires years of integration, of convincing, of persuading, of managing, having a great traffic enough to go on a higher perspective. So imagine if you're back to the operation time. Imagine you're some people that want to propose a new project internally in a company. What you would need to do is, first of all, propose that to your internal team, making sure the internal team is fully aware and making a consensus of sharing that to a higher team to get approval. The second, you would get to a second team, and then you may be asked for giving more traction or more requirement or hitting more goals before sharing the higher level. It's similar to us. We want to do a strategy which is on a top-down approach, but bottom-up way to grow. So what does that mean is, in terms of top-down, is that we work closely with different C-levels, directors on telling them and learning what kind of pain points they have. So the problem we're solving is not too small. It's not to a single architect engineer. We're not solely focused on single software or even full stack engineers problem. What we're solving is the entire team's problem. But the way we do is as a top-down is they are aware and they know that we're solving the problem, and we get introduced to the right team who is in charge to solve the pain point. But on a bottom-up way to do it is that through building this kind of like use case with them to build a POC with them, we always start fairly small, want to making sure that everything goes as how we want it to be. And then once this has been done, then you share it to other teams that might share the same pain points. And then after that, you might share that's the same pain points, and they start to working with more teams. And after this team has been fully served, then we talk to other market and the other regions on about, hey, how this could be done, how this could be a little bit tweaking a little bit, but also it helps you on solving something. So that's why I think the communication plays a big role over here in terms of how to making sure this could be end up with on driving the bigger value on a scaling business internally as well.
I got it. And the last question is, how does the firm balance investment goals versus the strategic goals?
Yeah, so investment goals and strategic goals is always a never-ending conversation. Strategic goal is still our North Star. So I quite like the way the author of the Venture Mindset, which is Leah, have mentioned about something, and I want to share with everyone. But I think it's a really interesting perspective that he mentioned that none of the CVCs can say they're financial driven, because no matter how successful as a financial driven CVC, if you compare it to the core business team, the revenue that they generate from their parent company, you're still not going to be the same size. Thinking about, let's say, really big company, the money they generate in their specific like really profit generating team, and you want to compare that with a CVC return, which would probably take a longer time, you really didn't see that making sense. You claim yourself as a financial ones. I found it really interesting to see that, but to agree and to debate, I think the debate would be the financial supposed to be financial independent and profit generating, but it doesn't need to be a financial leading internally to your parent company. So what we see is the similar things. We want to drive strategic value out, which is a North Star of ours, but financially, we also want to be like financial self-sustainable and also generating profit that good enough to making sure our existence will still be there in the next decade. So that's the mindset you're supposed to have. And that's how the balance and how the strategic and financial allocation you need to be designing on a constant basis.
That reminds me of like a lifestyle balance, like a work-life balance. But it's a
Exactly.
very good one, because that's literally should be the differentiation between CVC and the financial focus pure VC, isn't it? Because it does seem like though, although you guys only went through a few years, you've already sort of find that balance, which is good to know for founders. Like you said, you guys are very patient capital, and that sort of balance between financial and strategic also sort of complement that point. That's very good. So last question for this session. I mean, what kind of AI trends are you looking at that you're looking at very deep down right now for your project evaluation?
In terms of AI, as I mentioned, it's a huge topic that we're recently looking at. So we spend a lot of time on understanding, because AI is basically can be favorable for both like fixed network and mobile network on the same perspective. So we have looked into areas that can deep enough to like data management, or let's say like data preparation, AI infra, silicon photonics, and a lot of different data pre-processing stage. We also look into like model deployment, model optimization, model training, model deployment, model serving, and even talking to like ML ops on these kind of different fields. But on the other hand, in terms of operation and management, one of the big thing I'll say like is probably our focus at the moment is more on the word safe AI. So safe AI is basically cover up with some topic we call it as a security and compliance AI, and also on the ethical AI, or also we call it as XAI, which is explainable AI. These would be the areas that we have seen some traction upcoming. Let's say there's the model security, there's AI governance, there's our AI guard deal, and there's either back to like deep fake detection that we have seen on different good start across Europe and America. And we also have ethical AI on responsible AI, how to making sure that we can making sure the model is on a federated learning, on making sure that the hallucination is not there. How do we making sure that the black box setting is can be explainable? So there are a lot of like different areas that we look at. But to summarize the areas we look at, I think in terms of the field that can be fully reflected is definitely safe AI is one thing. Because in terms of this, you have to know like from a data perspective, or even on an algo perspective, on a computing perspective, how can you make sure it is giving the principle of safe AI? So this is one thing. And the second thing I think we will be looking at is more on the ML ops, on understanding how the orchestration operation can be done. And on the one thing that from a telco perspective is that we're a big fan and we're a big advocate of adopting AI. But the one thing you have to know is the tech stack, the base tech stack of telco is still be something that we have built back in 1960s or 70s. So how should we making sure to basically fill the gap, fill the middleware between the 1960 tech stack and the super advanced machine learning models that could be built between like LangChain or even like PyTorch, these kind of like a really good connection points that helping us to do that. But the middleware to connect these two different tech stacks is something we want to solve at the moment. Yeah.
Wow, it's a lot of topics. Responsible AI, ML ops, internal, external, which is good. That brings us to the next topic actually. So we talk about the sectorial, internal, and how you see the world from an investment perspective. And I suppose you invest across the world in that direction. But with the latest geopolitical situation, Trump is now leading the US, and then with Elon, being a great entrepreneur, now leading the efficiency department for the government on the side next to the Pentagon. And now, of course, in the micro level, we see, like you mentioned, data center has been across Spain in particular, actually, and also Asia. But now you're investing in the future, right? So how do you see all this geopolitical situation shift that might or might have already impacted the process or evaluation of your investment work?
I'll answer the macro first. So I always have a thought that I share to a lot of founders is that don't get influenced or change or get feared or happy because the macro is either on the upside of yours or in favor of you, because the good founder would always be there no matter how the market actually look like on a macro business. So if we look at the COVID time, there's a hype during that time, or even the bearish market we have seen the last couple of years, but there's always good founders. And as a founder, the only thing you need to know is just do what you feel that you're the best in the ecosystem. For the investor perspective, I think the macro is a way just to be more, a little bit more, having more like risk ledger in terms of like having more consideration on the risk side. In terms, you can think, for example, if the recent political things, we're talking about Trump being elected, of course, that the future of tariff might be increased, reducing tax. With that increased, with the workflow automation be something that people will be interested about, is in favor of Elon Musk about the future of like EV will be in favor. Should we invest in EV, or is it kind of like something that's going to be overhyped because something you have seen in the public market is overhyped already? That means that the startup ecosystem might be overhyped as well years before. So to answer that question, I think the only thing you have to understand is that, okay, what is the components or elements that would be changed that would lead back to the startup ecosystem that you might have to help the founders to figure out this would be look like. But from a Spectre perspective, I don't really see that the macro change would be a big thing that we have seen in the last few years. So on a micro perspective, yes, we have seen. This is also the really interesting thing I would like to be emphasized more about is on the different progress and focus between different regions. So I'll give you some scenarios. From a telco's perspective, we have seen photonic network has been widely adopted in Asia, especially like Japan, Korea. They are probably the pioneer of adopting that. But from a European perspective, we basically learn a lot from them on how they open up and how they build the infrastructure that can basically embrace the new technology when the photonic network can be more mature in the European stage. So I think micro perspective is that's why we're constantly talking, learning to different regions, is that how people can do it differently. And even recently, we've been learning quite a lot from the LATAM team about how they've been solving the energy side on energy efficiency, on recycling material, on the material side as well. Because on the same time, the micro sometimes is leading by the government itself just to making sure that there's trend over there. So we see a lot of different things. Even in the European side, we have seen a lot of like deep tech, a lot of great deep tech focus start to have happening. We have started to see like from rack to rack, rack to server, server to server as well as some interesting topic, because at the end of the day, these kind of like focus would be all in the same supply chain. It's just about, okay, I know on the upper stream of ours, these would be some of the steps that are being made by the investor probably on the upper stream. So how can we see some startups in the relevant ecosystem that when they invest, the startup then I invest can be connected together to build the ecosystem quicker and better. So these are the areas how we map that by talking to different people from different regions. Yeah.
It's almost like how we manage our wardrobe for winter, summer.
Exactly.
You know, when you go
gradually taking some thick ones throughout the time. Yeah.
Exactly. And then when you go out, all of a sudden it changes. It's not the same as the apps indicates. You need to bring an umbrella. You just need to be alert every single moment. Or like in the UK, wear a jacket out with the head all the time.
Yeah.
Yeah, that is very, very good analogy. You know, with de-globalization would remain for quite some time. Does that impact your firm's investment balance between global portfolio versus local adaptation?
The de-globalization it could be a thing, and it on a perspective, it's also something that we haven't seen that quite heavily change us. So it talks about our why, because a lot of people might ask like, hey Kyle, like I know why do I have offices across Spain, UK, Germany, Hispan, and Brazil, but why most of you guys saying that you guys are a geographically agnostic investor, but you guys sit on the top of like different markets, and why are you just not focusing on the UK business or European startups? So one important thing is that because the way we structure our fund, a lot of people, a lot of VCs, why the reason they only focus on European or even UK or their specific market, also because the LP over there sometimes have a certain regulation or restriction for only invested in certain percentage of startup that outside of the region. That's followed by the restriction. but we're lucky enough we're a balance sheet investor, so we're not really fully have that kind of like limitation. But at the same time, what we want to really see is finding the best player rather than the best player in the market that we're at. And I think that is really important because at the backside of your head, you have to know Telefónica is a global brand. So as a global brand, the solution you're finding cannot be only local solution. So what we do a lot differently is just to benchmark quite a lot on understanding, for example, there is a good company in our local market and there is a better company in the global market. But one thing you have to really evaluate is how possible that kind of really great solution globally can fully integrate and work closely with Telefónica, or should I find a local one and nurture together with them, helping them to basically pivoting into the way that we really want to see and really bring the potential. So these are the constant conversations that you always really see. But to answer your question, de-globalization is something we have seen, but we have managed to find a great way to navigate that.
So acknowledging this happening while keep focusing on your strategies. Are you aware of any new CVC business models across your peers that's evolving?
There are different type of CVC when you talked about this word. So there are, besides the strategic or financial or hybrid, I think the structure itself also might reflect quite a lot on how they invest. So there are definitely different models. So for us, we're evergreen balance sheet. So that means we don't have a fund structure. So when you talk about what's your AUM, it's not a question that we're able to answer because we're not in control of a specific fund size. But there are also a single LP fund, which is they have their parent company at their single LP, and you will also have multi LP fund. So that means you're basically operate like a VC, but one of your anchor LP might be your parent company, and you also invested by the mutual interest or some kind of areas that the multi LP would like to see from the ecosystem. So there are different models that we have seen, but also at the same time, in terms of investing, there are CVCs that do like a startup venture, like they basically grow together more like a nurture, hands on hand, giving the actual help from a really early stage of business they invested in and grow together with them. That they might come in as a pre-seed or seed stage, grow with them together at a series A or B. We have seen that, which is like a venture studio type, and you will also see some kind of like stages like this, focus on series A and B, that focus on helping them scale and expand. You will also see some big players like IBM doing a great job on this, especially on investing, or even Allianz, the insurance company. They do growth stage specifically because they really do see that's the stability of the startup they want to work with. And also, on the same time, I think the way they do it is also on a different perspective on how they evaluate it. So I think you will see a different aspect the way people invest. Yeah.
Along the line, what benefits and challenges do you see across these different models?
I wouldn't pick each one and answer that, but what I see these is none of these models and none of these firms have been following the same model in the past futures. So if you see a venture studio right now, looking 5-10 years ago, they don't even have a CVC arm. But the way that they do it is basically they want to making sure that they can create an actual impact. But at the same time, the financial is also something that you have to be aware of in terms of driving that strategy is good, but are you sure like the financial you can keep up with that? That's the one big thing you have to really remember. The second thing is that for our stages also, like we're basically more on a in between those. But how are you so sure about the company that you bring in, having them scale can also drive both value on a constant basis. And for the growth stage, something they have to figure out is why would they see ourselves differently from a pure M&A department in a tech company? So what are the innovation things that they can really drive? So these are some of the challenges and obstacles I have been heard, I have been feel, I have to see in the last couple of years. Yeah.
How many CVCs in the world globally would you say that are already quite established, if not mature?
So this is purely come from my personal experience. So we have done some research about globally there's over like 2,000 CVCs. So each of them can have a different vintage. But to define a really mature and really well established, I think there will be around 1/10 of them are well built and mature enough. But even I would like to revalidate my words, and maybe we can talk about the podcast in the next 3 years to look back about how many of them have been changed. It could be they're entering a really downward performance, or they basically being a like a best performer CVCs in the next few years. Still, like, is 1/10? I personally feels like, but there is still a constant changing about the 1/10 of the company who that they will be like in the next few years.
It's a good number because I think, well, without having heavily into this sector, will be a much lower number. But then you are in the players, right? So I think this sort of CVC numbers and involvement will be very interesting to track. Like you said, we might come back to another podcast in 2-3 years, and that number might be like, I don't know, upward or downwards.
Definitely. And just adding more on the definition of mature, there are some CVCs that specifically invest in some areas, and the area itself is probably not that old enough. So if you're looking at some of the Web3 CVC, they're doing an amazing job. But if you're talking about Web3 in 10 years ago, there might be no people willing to open up a CVC arm just for Web3. If we're talking about AI, some of the AI companies that people have been invested in, the technology you haven't seen it back in the days. So I think the dynamics of a CVC, how mature they are, or how successful they find portfolios, really depends on if the parent company is actually on the trend or in the future trend of something that's going to be a major trend in the future. Yeah.
We see so many trends in the market that's ever changing, fast and slow, existing or even diminished or not yet mature in the case of Web3, for example. But you could always come and go, quick, just like an ocean waves. So as a CVC, your role, how do you sort of navigate around these trends to ensure you grab it right at a good time? That's the first question. And then the second question is how you translate that really into execution, finding the target, invest it, quick and swift.
Yeah. So the way we see it is, as I mentioned previously, time people, but how in terms of time people, we're not going to really invest in something if we ask 10 people and 10 people say that it's super good. We also have to run some tests. We also have to run some numbers, right? So the first important thing is we talked about the problem, right? Okay, this is a huge problem, but how many solutions there are on the startup side? We have talked about a lot of like topics and fields, but we don't see a lot of startup quite active enough in the market. So the activeness of startup ecosystem is something that we also would like to validate, because the critical problem you have could be solved by some of the big tech companies solve that by coming on another like product iteration, and might be easily solved. So this is the thing that we took a look about, like how active startup is, and then we look at about like the market itself, because on the same time, if the market is not big, there's no return for us. And so the size of the problem is also something really do matters. And the size of the problem that the startup can target is also different size, right? So you really have to see like how big the market is, so that you can really calculate like what are the potential profit space that you can gain through that. And the last thing is that how many kind of like similar is looking like a stock market, right? You have to see the historical pattern change. So if this emerging technology is following the same pattern change of some of the biggest tech trend at the moment, or is it follow some kind of like overly hyped trends that end up with nothing? So the historical data you have to see, either it's how many of the startup you have registered around that, and what is the kind of like the revenue structure, or what does the cost structure look like, and how is the revenue stream that look like? Is that stable? So you have to go through some kind of like benchmarking, finding some companies to run the test to really see, okay, commercially this is making sense, but financially is this something that we will see the value come from that? And to answer your second question, is that how can we really transition that into a real impact if we really see this from growing? So first thing is, it's not something like you want to do something one day, you can do things the other day. You also need to really tell startup that you are well equipped with the knowledge to really helping the company to grow. So externally, you have to constantly talking to the relevant fields of the founders, to telling them, hey, I want to help you on doing this, and I really do see something that internally we have the pain points. I want to really making sure that I can bring the impact to you. And then internally, which is I think is way more important, is you have to talk to the right team on this. So there might be a really, really new emerging technology trend, but you really have to find the right team to talk to and telling them, hey, we have seen this and that and this field. So the way of doing that, and it's probably the strongest weapon, is selling FOMO. You can tell them, hey, we have seen this market has been doing the similar thing, and this market I've already talking to these kind of startups, and these market have already invested in these startups, and these companies have already invested in startup that generating this double-digit, triple-digit millions of contract. Do you want to be a pioneer in this field as well, or do you want to be a follower and wait till the entire tech cycle has been ended and you just go along with it? So these are the things that we usually bring the educational piece to the internal team, and also on the same to educate ourselves on something that we can't be too ambitious sometimes, because there are some technology or some commercial thresholds that we can't go or pass with that have to align with Telefónica. So on the same time, we're also training ourselves and also bringing the educational piece internally, externally. By only doing that, you can connect both internal external components together to making sure when they want to create a synergies, they're on the same page. So that's the way we would do it.
Wow, sounds like a refocus, internal, external, refocus your direction, refocus on that one thing to commit that make it work. So last but not least, I think this is one of the most exciting topic for today is about your new initiative, Kyle. I know we talked about last time in person, you've got this CVC Office Hour and you launched it recently. Can you tell us a bit about what is it, what's the objective and what you're trying to achieve here?
Yeah, so I'll start a little bit longer about what I have seen when I joined as a CVC investor is that when I was back in like VC, I feel like VCs has actually talked to each other quite a lot on sharing deals, understanding each other's focus. But when I get into CVC, I usually don't feel like people are talking to each other quite a lot. It's not that collaborative because on the same time, what I realized is that CVC sometimes don't even know what kind of CVC are you or what kind of CVC am I this year or even next year. So I started talking more CVC folks in the ecosystem, and then we just both have resonate so much on we should talk to more people. And we do think that the synergy that we can create either financially or commercially or even knowledge perspective is going to be really amazing. So we started growing this to a larger scale, and currently we have around over 100, 120 CVC we have talked to, and then we start to bring more initiative. That's why you have seen the CVC Office Hours that we have initiated together with some of the folks in the field that are passionate about helping the same thing. But if you look back in my LinkedIn or some of the things that we as Wayra have done is that we're trying to be like the one who initiate a lot of different things in terms of having a breakfast, understanding what are everybody's focus, what are basically everybody's pain points in terms of managing and running a CVC. On the same time, we have some networking event that we're also trying to see what are the things that have been missing in the ecosystem that we can bring. But coming back to the CVC Office Hours, the one thing we want to do is simple. We don't think there's enough exposure from CVC towards startups. And we think startups is as clueless or even more clueless compared to us towards different CVCs. So we want to create that kind of like direct channel, direct way of bringing some individuals directly to the startups that might want to talk together with CVCs, understanding like what exactly should I design my fundraising structure. Should I look for 80% of CVC, only 20% of CVC, or should I do it reverse way? And how should I making sure that the CVC is the real CVC I need, is the real strategic assets I need? And even more importantly, what does the exit look like for a CVC, to be honest? So these are the things that we that's why we want to do these kind of alpha hours towards the startup market directly. And it feels we're looking at it as something being shared across different verticals. So if you have seen the 24, 25 CVCs that are joining, it's had just such a wide range. It's like in banking finance, there's insurance, there's even consumer focus, there's even different like climate, automobile. So there are so many different types of CVCs. But the problem we share is amazingly and surprisingly see can be shared mutually. So that's why on the same time, the way we design is we want to focus on some of the areas of startups that we want to help. But on the same time, we also want to learn from you guys on what are you building? And what are the things that we can probably learn more about in the future in terms of investing or even telling our parent company about these are something that I have seen in the ecosystem that might help the entire the parent company to grow in the long run. So yeah, there are a lot of initiatives, but all in all, what we're trying to do is really like liberate the entire CVC ecosystem by giving everybody the access to each other and being transparent on the knowledge that you have, on the knowledge you have built out throughout the way.
What are the programs that you're launching? Specifically in the near term, for example.
So we have been grouping up together to build a community, which we call a collective. But we are still trying really hard on seeing like what are the actual initiatives that we have seen. We have giving trial and error on different kind of things. But what we will do next year is that we want to be keeping more people in loop. So in the vision, that the thing I can share right now is that we want to be a one-stop shop for all strategic capital. So VCs is going to play a super important role into this, and Startup is definitely one of them. This is our fuel. But one thing I want to share over here is that don't see us as only a few CVC playing together and trying to making sure that we're helping each other. But one thing really important is that the folks out there, if you're VC, PEs, family offices, other of a field, don't think you're being excluded outside of this. we want to loop you in, and I think that this is going to be some major milestone that we want to achieve in the future. That we want to making sure that whenever you guys would need a strategic capital, or even I think that a lot of VCs or even family offices also share the same confused with founders about like, what the hell of a CVC are you? So we will be answering that to the wider ecosystem in the future as well.
I love that. It sounds like a CVC starting, but more expanding into different varieties of investor nature, while hopefully at the end of the day is connecting back to the startups to make the transparency, make your investment, and ultimately make the impact. Exactly. So as a founder, I know then people know who to approach from here. We want money, want impact, want resources. So I think with that, thank you so much, Kyle. We had a very good 1 hour chat. We talked about so many things. So hopefully, I hope your program would get very successful. And then from here, I wish you all the best, Kyle. Thank you so much again.
Thank you so much.
Yeah, thank you. Cheers.